Hello everyone, my name is Simon MacAllister, Strategy and Transactions Partner with EY. This is one of a series of videos where I'll chat to some of my colleagues to share what's going on in the market, giving you an up-to-date view on what's happening and things to watch out for as we enter 2023. Today I'm talking with Luke Charleton, Strategy and Transactions Leader and Restructuring Partner. Thanks for joining me today, Luke.
Good to speak to you, Simon.
So we've had a few unusual years in the restructuring market where we've had various issues from COVID to supply chain issues to inflation to energy, and various waves of insolvencies haven't happened. But what's happening in the market at the moment, and are there areas where you're seeing maybe more distress than others?
Yeah, so there's been a very interesting number of years, Simon, and there hasn't been the wave of insolvencies that some may, including myself, have predicted a number of years ago. I think that's great credit to the supports that have been provided by government and revenue and lenders to ensure that the business community continues to survive the one-off impacts of things like COVID. However, as you say, inflation, supply chain issues and energy costs, plus the rising interest rate environment, continue to cause difficulties and challenges for the business community. If I take each of them in turn, energy costs have reduced, albeit many suppliers of energy have hedged their costs at higher rates, so that will take some time to feed through. The interest rate environment is interesting, and for leveraged businesses, they can expect their cost of capital to increase through 2023, albeit maybe as not to higher rate as we may have expected at points during 2022. And lastly, the supply chain and inflation costs that are in the system. Again, the early indications are that they have come back a bit, but the wage pressures and supply chain disruptions are expected to be a challenge to continue throughout 2023.
Okay, so a lot of complex factors that have been impacting it.
Very much so, and I think in terms of industries that have been impacted as a result of that, I think any consumer-facing industry has those concerns. Businesses that are leveraged have to be more concerned about the interest rate environment than maybe we have had to over the last 5 or 6 years, given the increased cost of capital. And then high energy users, which can be across many, many sectors, do have to watch and be concerned about the impact on their businesses.
So if someone's watching and they would like to monitor, for signs of distress for suppliers or for customers, what are the kinds of things they should be watching for?
Yeah, I think, again, it's about open communication as much as possible with both your customers and suppliers. It is doing the expected thing, keeping an eye on their corporate filings and are they up to date and what messages are they being given. It is understanding whether their payment terms, if they're either a supplier or a customer, are stretching that, or if they're looking for unusual discounts to accelerate cash payments. I think they're the sort of indicators that one would mean that you want to maybe watch whether that supplier or your customer needs more engagement than you would normally have with them.
Okay, some very practical advice. Mm-hmm. What should we look for in 2023? I won't get you to predict interest rates or inflation, but what are the kind of factors in 2023?
Well, I think that they are very similar to what we've had during the last 12 months, Simon. I think the factors that we have discussed about are the things that we need to continue to focus on. I do think in Ireland, though, that the economy is in very strong shape going in to 2023 and is different, say, to the global financial crisis, both at a public level, a corporate level, and an individual level in terms of the balance sheets. But there are areas where distress may still occur. So I think any consumer-facing business, there is an uncertain outlook. I think the construction industry is one area that the planning system means that there isn't the same level of construction going into 2023 as there was in 2022. And lastly, I think the supply chain disruptions that are out there may mean that we have to watch what other countries and their economic performance means for our exporting population.
Okay. So if someone's business or part of their business is being impacted by distress in a supplier or in a customer, what are the kind of actions they should take?
Yeah, I think when you're looking at your own business, I think the key things is to identify the areas of the business that are maybe underperforming against plan, investigate that as thoroughly as possible, and put a very clear remediation plan with targets to turn around that area of the business. I think the key focus when an area is underperforming is cash and cash flow. So we would always suggest that businesses should focus on that as a short-term measure, as well as putting then medium and longer term measures in place to turn around performance.
Okay, very clear. Thanks for joining me today. Lots for people to be thinking about. If you have any questions from what we discussed today, Luke's details will be included along with this video. Keep an eye out for the next episode from our Strategy and Transactions team.